What is going on, everybody? And in this video, we're providing a state of the market and stock picks for November 3rd, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was the day of monetary policy. Obviously, it did not work out well, but nonetheless, we came in as expected at a fourth 75-point basis move. Again, very, very historical to have four back-to-back 75-point basis moves. And rightfully so, in the fact now that we don't know what the core is yet. We do know to this extent that core isn't coming down very much at all. It's core inflation is actually very sticky right now. And so at least another 75 is necessary until the next monetary policy, which is in December. But we will have core next week, and then we'll get one more core right before next monetary policy. So we'll have two cores before going into next monetary policy. So it was much necessary to come in with the 75-point basis move. That was expected. The thing here to keep in mind is Powell and the way he fielded questions. Originally, the market started to rip, as you can see from this wick right here, when the initial rates came out, because it came in as expected. There's some different wording in there suggesting that there would be some sort of tapering off of rates. Now that hasn't been in there, so that was a new piece. That's why the market started to rip, and then it all fell back on Powell and how he delivered. And he did not change his tone. He came in hawkish in extent, saying that it'd be very premature to think that things are coming back, that we are currently pivoting, that we still need to know where the data is. And rightfully so. It's something I've been talking about. We have to know where inflation is. And coming into this one, I don't think it would be very smart to come in at a 50-point basis move or a 100-point basis move, because really you don't know what the core inflation is yet. So there's no point overdoing it. But you want to at least keep that 75-point basis move on tap, just to hopefully correct. And we've seen what the damage is doing to the earnings. QCOM had a horrible earnings after hours as well. So a lot of these big corporations are just getting hammered and hammered and hammered. And this isn't going to help. This is why I'm talking about Q4 could get potentially really, really nasty for these companies, and why it would be a dark Christmas, something I've been talking about. And right now we've been running off of hopium that there was a pivot. And obviously every time we get this hopium, there's always some data, particularly core policy, that's telling us, no, that's not correct. This is what the true numbers are. Powell has not changed his tone. He's made it very well clear and been very transparent. He needs to know the data. He needs to know what's going on with the core inflation. If the core inflation is getting sticky and not coming down, he cannot pull off, because as soon as he does pull off, inflation could start running. And then at that point, it'd be near impossible to catch it. So that's what he's trying to avoid. And then again, he has to be very mindful of what he's saying and be very general. And he kept saying that it's really dependent on data. Of course, it's dependent on data. We need to make sure inflation is coming down. And so, rightfully so, Fed futures are trying to price in a 50-point basis move. You cannot price any of that in. We don't know what the next core inflation is. We haven't had core inflation for a while, for about a little over a month. You don't know what it is right now. Yes, the other data shows that, but I can tell you what, it's not the core. The headline inflation, rental units, is where inflation is, and inflation is very difficult. And Powell even mentioned this, that it's switching, and he's very well aware of what's going on in the housing sector there. And things just, they're not getting better. They're getting better in some aspects, but worse in a lot of other aspects. And so, being said, again, something I've talked about all throughout this earnings, credit cards haven't changed. Credit cards continue to have a ridiculous gray throat right now. Saving rates are all-time low. People are kind of expecting for the Fed to step in again and start issuing out checks. But what if they don't? These people will go bankrupt. And then right now, the housing interest rates have come down a little bit, but I mean, they're still at a 7.04, I think, right now, or oh 06, compared to a 7.16. So they've come down a little bit, but again, just like headline inflation, it's not enough to make that big of a difference. At this point, it's extremely too high. And so it's going to be hard for people to get loans to purchase homes. And roll-offs are going to continue to happen, especially going into this holiday season with another 75-point basis move, and then in hopes that inflation comes down in the next week's report. So again, data is going to become extremely sensitive. We're at a point where data is back to being extremely sensitive. And we started seeing that when we were getting some great numbers. Hey, everything's fine and dandy. Now we have non-farms on Friday. It could hold more weight than normal because of what's going on. And the fact that, well, why is the Fed coming at 75? Everybody's trying to predict, well, this number is better, so that must mean the Fed are going to dial back, and they don't, because it's not the true numbers. The shifting, again, earnings are the forefront of what's telling you what's really happening. Then the core, even though it's still manipulated in a lot of aspects, this is why they pull reports out and separate headline inflation from core inflation and all this other jazz to try to show that, no, everything's okay, but it's not. Again, rental units are way, way too expensive right now. And so that's forcing a lot of people to drain their savings and to max out their credit cards. Again, just waiting for the foot to drop. But again, it's really based on timing. We will see what happens tomorrow. Normally, second day red days are the worst. So we had that major leg down today after the report. Just understand that the second leg tomorrow is going to be even worse. We're going to be revisiting 3,600 again tomorrow. Strong possibility. Had that massive sell-off after hours, just because, again, we're right back to where we started. We weren't anywhere. The hopium that's been pushing up the market, again, a bunch of nonsense. You got hopium plus you got earnings mode is essentially what we were in. So the mix between the two causes the pump. Now, getting real results. Now we're going to correct back down to 3,600. Roughly what we're going to do. And then core, hopefully core doesn't go over. Now, if core is over or stays within 8, then you're going to start introducing some panic, because people are going to be like, okay, well, we're still at 8, or we're climbing back up to 9, or we're over 9. What is the Fed going to do now? And people are starting just to see what these rate increases are doing. And that's what they were, it seemed like they're almost blinded to with the fact of what core was really doing. But you're starting to see that in these earnings statements and everything else, and in housing, the housing industry and what it's actually doing and the damage it's causing. And you add another 75-point basis move, and then potentially you don't even know what December is going to be, but you're going to have 2 more core that hopefully they come down. If they don't, that just means you're going to have to add another 75, if not 100, really gauging off of what that core is. And then you're going to have 2 reports just before the next monetary policy to close out the year. So with that being said, we're in a really bad spot tomorrow. Very bearish. Normally, again, second red days are the worst. My point here is going for my target tomorrow is 3,600. We will see. Again, looking for a potential retest of roughly around that 3,800 before a very long, strong leg down. I think that retest will be overnight. Close to it, and then we'll get a very strong leg down tomorrow, and then go from there. Dollar already jumping up. Again, something I talked about. Kind of saw this coming with everything else. And don't get me wrong, I started kind of believing in some of the hype that there was a strong possibility that things could correct just because of the people reaching out and everything. There is a possibility. You can't not think there is a possibility. You have to think of all the options. But again, there is just too much bad data to say otherwise, to just think that we're going to pivot like that. Being said, the dollar is going to skyrocket tomorrow. I think the dollar could potentially make, maybe not tomorrow, but by next week, make an all-time high, or make another new high here, and then see where we land. But again, if you want to notice, Bitcoin is still at 20. It's consolidating very nicely at the 20K mark. Something to be very, very mindful of. I think this is going to lead the charge when we do actually pivot. Problem is we don't know when we're pivoting, and I don't think it's anytime soon. Something I've been saying, I said even if we got a rally, it would be very short-lived, just because of the overall theme of the market is still very bearish at this point. Tesla got mollywopped today, looking to see if it can hold 200. I really like to get Tesla. Again, if it breaks 200, I'd kind of really like it around that 185 as where that monthly support is. So kind of watching that monthly support, hopefully to grab it down there. Again, still did very good on earnings. Airbnb, great earnings. Forward guidance, really uncertain, so it's really been selling off. I really want to grab this one. I did grab it a little bit earlier today. Had a starter position, got tagged out with that massive rip down. But nonetheless, looking to jump back into this one. BA absolutely got wrecked here. Looking for another leg down, at least to the 136 tomorrow. So we want to see where BA ends up tomorrow. But again, I think it's going to break the 142 and then continue to sink along with the rest of the markets. The banks, this is going to start selling. Been looking for a pullback. This is absolutely a parabolic run here. It's been needing a pullback severely. Watching that 125 on JPM. Thinking overnight we might gap down, bounce up here, and then potentially start selling tomorrow. Definitely keep an eye on banks. Again, if the banks start folding, it's going to tear the rest of the market with it. GS, same thing. Big wick, looking for this to start selling back down to the 330 tomorrow. Bank of America, again, same thing. Wick, looking for this to sell back down to the 33. And then one other one I do want to really keep on watch, because this leg I think is going to be important, is Roblox. Is one I definitely want to start looking at again. I really like it around this 24 mark. If we can get that low, I don't know. We may only be able to tag the 33 here. So maybe looking to pick it up there. But if I could get it at 23, that would be great. Again, I think the way things play out, I think we get a strong leg down tomorrow, possibly Friday, and then waiting for a core. Now, if core is bad, I can see us revisiting the 22. But again, we'll definitely have to see. Snow is another one I want to keep on watch. I do really like Snow. My buy zone for Snow is at essentially around that 110 mark. So looking roughly around here, probably more 115. So looking to buy Snow down at this level, I think could do really well. It does have earnings coming up on the end of the month. So do keep that in mind. But if we can get revisited roughly around that 116 mark, 117 mark, potentially ride this back up again. So looking to get in Snow. I do really like Snow as well. So a lot of these I want to really keep a track on, start buying some shares in some of these, because I do think we are getting close to a pivot. It really just depends, again, on inflation. I'm talking about DCAing, but I'm going to start getting into more positions and playing longer positions now. A lot of the stuff is becoming repetitive. And even though we may be correcting now and into tomorrow, I still think that there is some more rally coming. Again, I think we do get that Christmas rally, but that's not till January. Again, the next 2 months are kind of dead. They go kind of sideways. So just be mindful of that in a normal cycle. So we're going to see if that plays out or not. Again, it hasn't been a normal cycle, so it could have a lot of volatility still, especially with the core next week. Then you might have a lull in between that next core and next monetary policies. So we have to see. But with that being said, that is pretty much what I got. If you made it this far, I appreciate you. Go ahead and drop a like button. And until next time, I'll see you guys later.